Hey, it's Mike with PriceActionTradingSystem.com, and it is Thursday. It is May the 14th, so this is going to wrap up our week for chart lessons. No chart lessons on Fridays for the most part. I may change that up just because of the virus stuff and being not being able to get out as much. I'm spending more time in than I normally would. So if I'm here, and especially if the weather's bad or something, I may do something on Fridays. But for the most part, especially down the road, I'll probably, when we kind of get back to normal again, especially when I get my eyesight back and I can play golf again, I'll probably be taking off early on Fridays. I used to play golf every Friday afternoon, and I'd like to start doing that again this summer. Again, with my eyesight, it's pretty hard to play golf with one eye when you're used to using two and you have no depth perception. So my golf game is not very good right now, and I'm not very interested in playing. But hopefully, coming up, that'll change. And so, just for the most part, I won't do chart lessons on Fridays. But if I'm around, who knows? You may get a surprise chart lesson, or I may do something special on those days. But for the most part, it'll just be Monday through Fridays for any of y'all that are new and not kind of not used to that. So, the other thing, I know I say this every day, but I really want to cut the videos down. They're getting to be too long. I'd like to narrow them down to 15 to 20 minutes. 15 being the good side, and 20 minutes being the the worst case scenario. And that's so what I'm going to do. And I'd like to start getting back to doing more of the actual trades on the chart. A lot of you are asking for that too. So it's a mixed bag. I can't ever make everybody happy because half the people want to see one thing, the other half want to see another. And so it's really hard to make everybody happy. So when it comes down to it, I'm probably going to do it the way that it's easiest or makes the most sense for me. That's probably going to be the decision maker. So what I'm probably going to just start doing is only showing one or two traders charts, because I know that's been helpful for a lot of you, and I've had a lot of good feedback on that. But I end up, next thing, I go over two or three of those, and next thing I know, I've used up 15 or 20 minutes, and that's where most of the time's going. So I'm going to try to cut those back to maybe only a couple of them each day, and then I'm going to get right on the chart lesson, and I'm going to try to go through all the trades. And if I start running out of time, I may just cut it off, but I'll spread the chart out and give the video a couple of seconds to get a good picture of it, and then you can always still look at where I mark the trades on the chart after the fact, even if I don't get a chance to talk about it. I know some of you asked me, at least two or three of you asked me about yesterday's trades, and I'll try to go back and mark those that I didn't mark after 11 o'clock, but I'm just so stretched thin on time lately that I just don't have enough time to do everything that I'd like to do and everything that, all the requests I get. So I'm trying my best. So y'all hang in there with me. It's just me. Unfortunately, you can't hire somebody to do a lot of this stuff because, I could hire somebody to come in and do whatever, but if they can't read a chart, they don't know how to trade, they can't help you. So unfortunately, that really comes down to me answering those type questions. So it's hard to get in, it's hard to train somebody for that. It takes by the time I get somebody trained, they'll be ready to move on and do their own trading. They won't want to work for me by the hour. So anyway, that's kind of good. That's going to be pretty much the way we'll progress going forward. But I'm not going to beat around the bush. I'm going to get on it so we don't waste any more time. But I'm going to show you a couple of traders charts first, and then we'll do the trade. Okay, trader sent me this chart, and he went long right here. It still worked, but this was a very dangerous chart. First of all, you're really just kind of going sideways. Look how you got 1, 2, 3, 4, 5, 6 bars stacked up, and you got that doji right there. Anytime you get 3 or more bars stacked up and one of them's a doji, be careful, because that's just a little trading range or congestion. He had it right here, and really all you did was move down an equal distance. So that's one thing, but there's another piece of this I wanted to show you as well. But as you can see, he got the upper part of it here. But all it did was just kind of move down an equal distance. You can see that how wide that is, and we just kind of moved down an equal distance. It bounced back and it gave up and went lower. So that's one thing that it had going against it. The other thing is he does see the channel here. I mean, he marked this chart up, not me. These are his channels. And you can see this, it's got a little down slant. This is really sideways, to be honest with you, but there's still a little bit of slide of this slanted channel. So his channel is not wrong. So he sees that. So that's, and actually it's a first entry, second entry. That's a third entry as well. And the real kicker is all those stacked up bars. But let me show you something else. He doesn't have the channel on his chart. And if you start down here and draw the channel, we always start at the lowest point and you go through the first couple of swings through the closes there. Notice how I went, or off the bodies. I always say through the closes, but it could be the closes or the open. So just off the bodies. That's a clear trend. And look how that changes the whole picture. Now you see where he should have waited to go long, and look what happened at the key entry point on a high or low. Look at that. Don't just be patient. Draw these lines, and these were easy to find. And here's the other thing. This is probably a midline right in here, but we overshot that. At this point, this is the channel, just like I have it drawn right there. And we overshot that. So what does that mean? That definitely means you don't want to be going long right in here at the top of the channel. Wait till prices. Look what happened when prices got back. Boom, off it goes. First, you got to be able to read this. You don't have to get it perfect. I mean, even if you hadn't drawn this line perfect, let's just say that he drew his line. He messed it up. Let's say he started over here and he just drew it right off the end and he draws it like that and then he copies it and he drags it up to the top. Okay, regardless of whether he got this right, we still just came off the top. So just use a little price action sense is what I'll call it. Don't use common sense, because common sense will screw you up in this game. But use a little price action sense. We just came off the highs. We're at least going back probably to the midlines and probably back to the trend line. Now, he wouldn't have got a trade down here, but it would have kept him out of that because he just came off the high and he would have known not to go long back into that trend line. But if you get it right by drawing it exactly like I always tell people, start at the low and go off the bodies, and look at that beautiful trend line. Great. He could have entered here. He could have drawn that right here. He'd have got an entry here and here, and they were both probably had runners, and he'd be done for the day. Instead, he still got a winner here, but he just got lucky on that one. So I hope that's clear. That will really just make sure you're thinking about the price action and what it's doing. What does prices do? They go from support to resistance, support to resistance, support to resistance. And a lot of times there'll be a midline in there too, and you might bounce off of that. So just remind yourself, where are prices going, and then try to go with them. So yes, if we ask ourselves, where are prices going? Why did they go up here, and why are they turning down? And since they're turning down here, where are they probably going? They're going back to this trend line most likely, or at least the midline. Of course, sometimes they'll bounce off that EMA too. It's good. See how it did act as support, but it ends up getting through there because prices were coming back to the trend line. So just always remind yourself before you take a trade, all right, am I reading this right first? And if it is, where's the key entry points, and where are prices in relation to that, and which way are they headed in relation to that? And that will help you a lot. Okay, I'm going to show one more because we're already almost 10 minutes. And this is a quick, easy one. Somebody asked me on this, if you were going long here, which one is the proper entry? Obviously, can't hardly see my mouse here, but obviously this, I hope you can see this. I can just barely see it for some reason. Oh, it's because I opened it in. Okay. Somebody asked me about this is a good example. I'll do this one because it's quick and easy. I want to move on to the chart lesson. But somebody asked me, which one of these is the proper entry when you get a little... This is your signal bar, obviously. Everybody can... Well, shoot, I didn't mean to do that. Everybody can recognize that that's your signal bar. And should you enter one tick here, or should you enter one tick above the inside bar? If you're going to enter this trade, I would enter one tick above this bar. You could wait here and see if this is going to break higher. But if this closes lower and the next prices break above this one, that's still just as good. This is the entry I would take, like right here on this side. That would be the way I would answer that. But this is an inside bar, but it doesn't matter because this is still what we're using for the signal bar. This is still our trigger bar. And it's good enough that if we got a break above this little small one, we just get a little better entry, really. Of course, it means more when prices break up above this bar. But if you entered here and it broke above this bar and then couldn't get above this one and then starts going lower, your stop still has to go down here. So just make sure you don't put your stop here because it might tick lower right there and then turn back up because this is really your this bar right here is really setting everything up. So if the prices go below that bar, then you read it wrong and you want to exit. So keep that in mind. Okay, here's our chart from today. We started off in a downtrend. We had two legs down. We didn't quite get a measured leg. There's leg one. And then you would have started back down there. And you can see we came up quite a bit short. That would have been our target. And when we came up short and just started trending the other way, that means you're probably going to trend much further in the other direction than just a little small correction, and that's exactly what happened. So always keep that in mind. There was a few clues. Notice down here, let me back out now. Notice down here how we're not getting back to the trend channel line down here. That's telling you something too, and then suddenly we go the other direction. So always watch for that and keep that in mind. But then we had this two-tiered channel working higher, and notice what happens here. You get this two-legged correction, and what does that usually mean? That usually means that's the center of the pattern. Measure this one, and then look for the measured move. And that was right up here, and you see that's right where we made a little double top, and then we ended up going higher than that, but that was your first target right there. And that would have been a great place to exit. Actually, I probably would have exited on this big correction just in case it never went back up there. But it ends up going right to the target like usual. We see this all the time. So again, all we did was measure this one big leg. When you see that two-legged correction and prices start trending again, a lot of times that's going to be the center of the pattern. And then notice that we had another little one right there. If you measure that first leg right there, that's where the low started to the high, and then the little two-legged pattern come to right here, and that gives you a target. We actually overshot that target. You probably would want to measure it from here too, because that's really the whole leg. And that pretty much gave you close to a measured move there. Neither one of them were perfect, but it still gets you in the... It's always better if it goes further, because if it goes shorter, like this one did, and you're trying to get all of it, you may not quite get there, and then it turns down, and you'll end up wishing, hey, I should have exited. That's why I always exit a point or so in front of my target, at least. And if I start seeing it rocketing off like this, I'm not giving back all my profits. I'm going to exit. Even though it still gets there, who wants to ride out that and watch all your profits evaporate? Or depending on where you entered, you might even go in the hole. So don't let that happen to you. Just exit and look for another entry. But let's talk about the trades and we'll wrap this up. Let me back out. I'm going to try to back out. It looks like it's way out on my chart, because my screen is so big now, but I got to looking at the video, and it's going to take me a couple of weeks to, or maybe not a couple of weeks, but a few days, a week or so, to work all the kinks out of all my new stuff here, the new software, everything. So just bear with me for a little bit. I know I had the first video there. It just so happens I'm using the same brand, but I got of recording software, but I got the newest version. There's some slight differences, and it works pretty much the same, but it's not 100% the same. And one thing that's different is the highlighter on the mouse that you see here was about 100 times darker on the new one. So on that first video, you couldn't hardly see through it was so dark you couldn't see the bars and stuff. And so I realized it, but I didn't realize it until the video was done, and I wasn't going to redo another 40-50 minute video, so we just had to make do. So just bear with me till we get this all worked out, and we'll eventually get it worked out. But we had this big downtrend, two-tiered channel. It was real obvious, and 7 o'clock came right in here, and at that time we were working down. There's a little spike in channel down here, and notice we're working down. You get the break, couple legs down, and then we reversed. And where we probably headed? Back to here. We ended up getting a break and a new high early, but we still got right back to here. What do prices do? They go back and forth between support and resistance. So first trade I saw was right here. And basically what you've got is you broke lower here and you made this high, you tested it once, you tested it twice, and then you turn down. Really it's just a double top right off the EMA with a big bearish bar and a strong downtrend right at the midline here where you're expecting prices to go down here. And it's a second entry short. Notice that low, first entry, second entry. So you got all kind of things going here. You got a double test, you got a double top, you got a second entry short, you got a huge bearish bar. I mean, you got the whole works here. And I'm gonna another trader sent me this today, and it was a great example of people continue to ask me, what's a good signal bar? Well, when you see a signal bar, it needs to close in the bottom. If you're going short, for it to be bearish, it should close in the bottom 1/3. So if you took this bar and marked it in half and then marked it in thirds, that one's probably not bearish enough. It's right there at the borderline, really. I would say that's half, and I mean, it's right at the borderline. I marked it. I felt that was bearish enough, but one more tick and it wouldn't be. But use that 1/3 rule, and if you're going long, it needs to close in the top 1/3 or higher. And of course, the closer it closes to the low or the high, the better. But just kind of use that 1/3 rule, and really how strong the trade is, that type thing, and you'll probably be okay. So anyway, first trade, you catch that trade, and it might be all you need today. And then notice this, and I want to clarify this because this came up with a trader today as well. This is not technically a second entry short right here, because there's your low and prices made a new low, so that's just a first entry. However, that's still 2 legs back. Hopefully you can see that there's a swing up, a correction, and a swing up. That's still 2 legs back. And so it's not a second entry, but it's a 2-legged correction back to a key entry point with a nice bearish bar. And that one, it looks like a 2 legs. It's going to act like 2 legs. And look at it go down. And then we hit the bottom. We bounce. We're working back. You really just don't get another setup here. This one's tempting, and it would have worked, but we're not back to the midline. You got a little trend line working up here, which I don't have on my chart. Let me put it on there for you guys. I'm always fussing at y'all about not having yours. And you don't have that's the first close outside. And notice it runs up to a new high before it actually continues going higher. And then we just get stuck in here, no entries. There's a break lower, but that's too bearish. This one's going long right into the top. You can't do that. And finally it breaks out. And the reason I like this one is because it did go higher. Look out, we're a little ways from the EMA. It did go higher and turn back down, so your entry would have been right there. If you waited on this bar to close, it's real iffy if it's bearish enough. So and you don't have any room to the EMA, so I wouldn't enter it like that. So make sure that's clear. You would enter one tick below here, and the only reason because it went higher first and then turned down. And that turns out to be a nice trade. It trapped some longs way away from the EMA up here, and then look what happens. We come back up here, key entry point. Now that closes in its bottom third. It's not on its low. It's got some green in it, but that's still a bearish bar. It's closing in the lower third of the bar. Just go short. Look how far away we are from the EMA. Key entry point. This channel was working up. We had a break and two legs to a new high. And this is actually, you could look at this as a second entry and look at that low, first entry, and then it comes up in second entry. But that's really just one leg up. But it doesn't matter because of all the other reasons. It's a double top. We've tested that resistance all the way across there. It's still a good, the main thing, it's a key entry point way away from the EMA, and it's a pretty good signal bar. Then we come down and we get in this little tight congestion, which isn't, congestion is just a range with smaller bars. You fail out the bottom, but you don't want to be going long in a big downtrend, and it fails out the top and it gives you a bearish bar. Just go short right there. You're just looking for a scalp, but look what you end up getting. It's a great trade. And all you start out for, and look how it closed near its low. It's a bearish bar. And you got a first entry, a second entry, and a double test of that, a double test of the midline. That bar is very neutral, but it is a failed second entry long. And so I marked it green. It's not back to, it's a little bit away from the EMA and what looks like the trend line over here too. So that's an iffy trade. And just remember that if you see one that's green, it doesn't mean you should have taken it, because I had another trader send me something asking about a trade I marked, and I'd marked it green. So that just makes the trade, it's questionable. It's aggressive. It still kind of fits our rules, but it's aggressive. There's something about it that it's more likely to fail, in other words. It's not a sure thing, but it does fit our rules. So we move on down, and then we just go back inside another one of these ranges, and we make another double top, and this thing breaks higher or fails. Look at that bearish bar. You got plenty of room back to here, and that's exactly where it goes. It ends up going a little lower. You probably would have already been out. You wouldn't have got a runner there. And it bounces before we get to this trend channel line. Make sure you see that. That's telling you that the market's losing steam to the downside. And then look at it go. But you really don't want to trade this up. It's just too dangerous. And then notice you get another lower high. This is almost a repeat pattern of what we had over here. We didn't have as much sideways, but it's also a failure out of this. You can treat it like a failure out of that little trading range. And you get a lower high there with a big bearish bar. Just go short. There's a failed second entry long right here, but I don't like that. It's starting to stack up sideways. It's just kind of in the middle of no man's land, and it's not fitting this trend line. Maybe it's more like that. It does kind of gap over, but you don't really get that third touch to ever confirm it either way. So then we get over here. Remember, we came up short, so we're probably going to overshoot here on this side, and we do. Notice we make that high. Notice you got a little trend line working up here. You get a break. You move up to a new high. You try to go higher again, and it fails and turns down. There's some congestion here, but what's happening is we're way away from the EMA, and it's just the selling starting to overtake the buyers, and that's what causes it. Equilibrium is what causes that. So if you see equilibrium way away from the EMA, then that's probably a good thing, because it means we're going to end up going back. And you may get a trap first, and that's kind of what happens. It broke higher here, but when you get that bearish bar, just go short. Just make sure you probably want to make sure you got enough room to get out. But this has been a big downtrend, and we're probably going lower. we end up breaking what looks like the trend line here and taking off. But you don't really get a good chance to enter here. That bar is too neutral, and then you're just kind of going sideways. That's a pretty good bar, but it never breaks lower, so you can't really use it. It's not your signal bar. We're running up. Notice that trend line working up. Then we get a close. You make a little double bottom here, but again, just no good opportunity to enter, so just let it go. And then we turn down at the high up here, but you don't want to be going short and uptrend now. The market, look at this EMA. Everything's completely changed. Now that is congestion way away from the EMA, and it's probably coming back. So I mean, it's one that you can argue to be probably green, but I'm just going to tell you, you're better off just not to trade those, because you're counter trend trading and you're going to get some failures out of that. It's just the way it goes. So honestly, I tell people to stay away from those. Don't counter trend trade, because I see more losing trades from that than anything. All right, we're at 26 minutes and I'm not even halfway done. I just can't do this any quicker. Notice we come back to the midline. You got a double top up here, so you get this move up, and then you try to go lower, and it fails, and it traps people and comes out the upside. I like going long there. There's actually a failed second entry short there, but I wouldn't take that one. We're in the midline, and it's not as reliable. You run up, and we're just going sideways. No trades here. You run to the top. Again, this broke higher and turned down off. And we've proven this trend channel line, so we're probably coming back to at least here and probably going to the trend line. So again, if you're new to this, don't take those. Just watch them. When you get really good and you know you're reading your price action right, you can kind of take those. And we kind of overshot it, so we overshot here. And look at those two legs up, two measured legs up. And you get a new swing low there, slower than that. So that's a first entry, second entry, and we're a little bit away from the EMA. And you just had this big leg down. I mean, that's not just a pull back to the trend line. Something changed right there. Look how it went right through that, right through that, right through that. No support at all. Anyway, I mean, didn't even check up. It might have checked up a little right there, but that was probably just people profiting on their scalp right to there. And then you get this two legs, which is usually the middle of the pattern. Measure that first leg. And notice again, we didn't quite get there, and then it rockets off the other direction again. But that's a great setup right there. You're just trying to get a scalp, and look what you end up getting out of that. And we're working sideways again. And this is a repeat pattern. We end up having another repeat pattern. There was a couple of those today. But notice we move up, and you get another little two-legged correction. But notice this one, first entry, and it bounces right there, second entry. And this actually went lower and turned up. You might take that. It meets our criteria. I've marked it green. We're working up. You just don't really get a good setup across here. And you come down, first entry, second entry, right off the EMA, and it doesn't get much more in a scalp when it just keeps going sideways. This one is close to, you could argue for this to be green, because look how we're stacking up. And that's not quite a doji, but it's close. These are two bullish bars, and this is close. Another tick or two down, and it would be a doji. And so this one's close to being green. But it's in an uptrend. And it's a second entry long, and it's right off the EMA, and you got a nice bullish bar. And then you make another eye, you come back first entry, second entry, but look at that signal bar. They're not very good. And these two are actually higher than this one, so this is your signal bar, so you just really have to watch that one go. And it comes back first entry, second entry, and then third entry right there. And this was actually supposed to be right here. And the way I counted this is I counted that as a double top right there. And so first entry, and then when it broke higher, second entry. And that's a nice bullish bar right off the midline and the key entry point. Of course, we just came off here, But a lot of times when it gets really strong, it'll go up here. So if you get a good setup, take it. We actually closed outside and made the new low all on one bar there. And then you get a higher low right here. And you actually get a second entry long over here. But by the time this bar, before that bar closed, it looked like we were still going higher. But then you get all this sideways. You're probably better off just to wait. So you don't really get a good entry up to here. And then we overshoot the brown channel. Plus, I think we have the new high in place now. And we start working down. Notice that high first entry, and that's a second entry long that fails and gives you this. And this actually broke higher and turned down. That's a good entry right there. This one's too close to the trend line. It's a shame because you didn't get a runner on this one, and so you really don't get a chance to get any of that. And then this is the repeat pattern that looked like the other one. Right here. When you see those, you might have even considered that long, but that's just that bar so big. But you get the move up, you get the break, and then it rockets back up, and then you get that. Notice how it made that eye, tried to go higher again. It broke higher, then turned when it went out the other side on that repeat pattern. Just take it. Then you had a little double test down here. You made that low, you test it once, you test it twice. This trend line had played out. We're coming down, we got the break, a new low. And when you try to do something 3 times there and it fails, and look at that bounce, it actually went lower when it went out the other side, that far from the EMA. Just go with it. So, and that's 31 minutes worth, almost 32. And so a lot of trades there. I didn't want this to be this long, and here I go again, but I'm not going to beat around the bush. I'm going to wrap it up. I hope you had a great week. We'll be back again to do it Monday, most likely. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next